is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Last week was a watershed moment for the crypto industry. The SEC approved 11 different Bitcoin ETFs, which all began trading on Thursday. The data so far has shown some mixed results. Overall, there's been over $1 billion of new creations of these ETFs, which by any account would be a successful ETF launch, but I think failed to live up to some of the expectations that people in the industry had. I think a lot of folks believed that this launch was going to be the biggest of its kind in the history of financial markets. So just because you're not the number one thing to have ever happened in the ETF space doesn't mean that it's not a successful launch. But even still, the asset, the entire space has been a bit choppy, and Bitcoin itself is trading down a little bit. Another thing that's happened since is that ETH has actually started to outperform, and that's because a lot of people are, in our view, correctly anticipating that following a Bitcoin ETF launch, there's going to be an Ether ETF launch. In Canada, where we've had Bitcoin ETFs for 3 years, it took only 69 days for an Ethereum ETF to get launched after a Bitcoin ETF got launched. One of the big considerations there is whether or not there's a regulated futures market, which there is and has been in ETH for quite some time on CME, and that has been around for, I think, over 4 years. So I believe, and I think Andrew probably agrees, that this is something that is a matter of when and not if, and that's reflected in the closest proxy for the market, which is actually the Grayscale Ethereum Trust, trading at within a 10% discount to net asset value after widening to as much as like 55% last year. That is a reflection of the likelihood that a conversion will take place at some point. And Bitcoin itself has underperformed ETH in the past little while. So that's something people are looking for. Another thing that I'm just keeping an eye on in relation to this is how the crypto equities are doing. I think a lot of people anticipated that a Bitcoin ETF would be good for companies, publicly traded companies that are in this space. And I think that while that's true, and it will be true for some of them, for others it may not be. What we've noticed recently is that a lot of the miners have done quite poorly. And I think that those stocks have been acted generally as a proxy for the price of Bitcoin for public equity investors who are unable or unwilling to own coins in size. And now that there is another option, I think that those companies need to stand on their merits a little more than just relying on being a proxy for Bitcoin, meaning they have to actually, deliver positive cash flow. They need to be able to grow within their means and so on and so forth, which may even be a challenge with the halvening coming up and the block reward getting cut in half. So there's a couple things on that side that we're looking for, but the view overall of the market is probably the sell-off in those names is a little bit overblown. So that's sort of my take on the market as it stands today. That's actually not what we're going to be discussing today, but I thought I'd sort of share our initial take. Today, what we're going to be doing is talking a little bit about our outlook for 2024. We've had some killer guests over the last little while who have shared their opinions on individual projects or on specific ecosystems. But here we want to, do what we think we do pretty well here, which is sort of zoom out and look at this from a high level and sort of trying to anticipate and explain some of the big narratives and trends and concepts that we think are going to shape the industry and the market for the next 12 months. So with that lead in, welcome everyone to the show. And Andrew, I think we're going to start with you. So take it away.
Yeah, so these are our predictions, obviously, for the next 12 months. I'm trying to be a little bit more contrarian. I think that's, we've talked a lot about kind of the AI trend and there's all sorts of new projects launching that I think are going to be really exciting. But I'm sort of focused on 3 core narratives that I think are not talked about nearly enough. So the first sort of narrative is what I'm calling the revenge of the OG Ethereum killers. So what I mean by this is right now there's a ton of hype for new chains that are coming onto market. There's a lot of hype around, for example, Bear Chain, which I think is a great project. There's a bunch of new projects in the Cosmos ecosystem that are exciting, but I think they're the sort of OG original sort of Ethereum killers from the last market cycle are actually quite undervalued and not talked about nearly enough, and have actually had a lot of progress during this sort of bear market. So the Solana has sort of become Solana is not really underhyped, obviously. Like it's been growing quite a bit, but the sort of other projects in this category, so things like Avalanche, even like BNB, Tron, as well as projects that are sort of further away in their life cycle, like Polkadot. I actually think we'll probably outperform Ethereum over the next 12 months. And for the most part, this will be a relatively what I'd call hated rally because for the most part, people have sort of dismissing a lot of these projects as being kind of, casualties of the previous cycle. And most of the attention right now is on Ethereum, Solana, and sort of this like the long tail of new chains. So I think there's a lot of value there. And one stat that actually shocked me, for example, with Tron, which is kind of at this point kind of like a tether chain, it's actually done more earnings than Ethereum over the last 6 months. So it's just been printing revenue essentially through gas fees. And so I think, but there's almost no talk about it on sort of like the crypto Twitter timeline. And then on top of that, also like most of these projects are fully vested. The tokenomics are quite solid, and they have sort of a core community of developers that have stuck with them through the bear market. So that's kind of my first big narrative of.
So on that point, like Tron, for example, we've talked in the past about ETH not only generating revenue, but actually how there's the burn mechanism, which keeps the supply like relatively stable. Sometimes it goes down, sometimes it goes up a little bit. Is that the case with Tron as well?
Yeah, so most of these L1s, they all have essentially the same sort of model in terms of the revenue comes from gas fees from using, they all do the same business, which is selling block space.
Yeah.
I'm not sure if Tron actually burns their fees the same way that Ethereum does. I'd have to actually look into it a little bit more. But for the most part, they sort of redirect the gas fee revenue to stakers, which is effectively the same thing. And what's also interesting is a lot of these chains actually have quite a bit of TVL in their sort of DeFi ecosystems. So while Ethereum has been, outperforming quite a bit, over the last 2 years, Ethereum sort of market share over DeFi has fallen quite a bit from, effectively 100%, and now it's down to about 55%, with sort of, Tron, BSC, Solana all taking big chunks out of it, as well as AVAX. So yeah, I think while all the attention is sort of on L2s, new chains coming online, I do think these sort of OG Ethereum killers are due for somewhat of a comeback.
Like it. Okay, what's number 2?
So sort of related to this, I also think there's going to be a shift towards projects that are more sort of hype/growth versus value and fundamentals. So our prediction from last year was essentially that quality was going to rise to the top. So projects that had, were profitable at the protocol level and sustainable and also return that value to stakers and validators, would outperform. And I think for the most part, that's been true. There's been a couple projects that have sort of outperformed, but for the most part, Ethereum, at least from a relative performance, has done very well. And so I think that trend is actually going to reverse.
To me, like the ultimate, I don't mean to interrupt, but like the ultimate example of that is Bitcoin. Like Bitcoin dominance hit like, a 4-year high last year as a result of this. What I view as sort of like a flight to quality or a flight to stability in the context of the market, right? And now that's hit its peak and we have the catalyst, we're starting to see some changes in the market dynamic. Sorry, go ahead.
Yeah, no, totally. And I think projects that sort of focus on growth and even, dare I say, narrative over fundamentals and sort of protocol profitability will outperform if we are sort of indeed heading into a bull market, which is kind of what I think we're sort of there now. I think maybe the first quarter we'll see could be some choppiness, but I think for the most part, by the end of next year, we'll be significantly higher than where we are now. And so I do think the sort of like the crypto version of high beta names, so things like Dogecoin, different meme coins will likely outperform, as well as some of the projects in the sort of what's called like the decentralized physical infrastructure, like it's called DPIN.
Yeah.
So I mean, we had the founder of Hive Mapper on the podcast 3 months ago. It's I think their projects has since 10x in the last sort of 3 months.
I know.
And I think, which is crazy.
I know. Like, so it's the DeFi decoded effect. That's what we're calling it.
Yeah, exactly. So
Also,
I think
actually, Hive Mapper was a case study in my book Web3. So maybe we'll call it the author effect too. Either way, we're taking credit for it. All right, sorry, go ahead.
So I think that there's going to be continuation of that trend as well. So I'm pretty bullish. I'm pretty bullish on sort of, I guess, again, projects that focus on growth over sort of protocol profitability.
When do you think that starts to take effect? I mean, I guess it already has. So in the case of something like DPIN, decentralized physical infrastructure, which is actually related to one of my predictions for this year as well. Like, it's not like, in the market context where Bitcoin was the leader, we still saw some of these names where there is a lot of excitement and a lot of growth, but also just a lot of hype, catching a huge bid and going up like crazy, right? So it's almost like, in a way, Bitcoin is the leader and Ethereum has been the laggard. And as risk recycles down the market, Ethereum may do better, as will these other L1s, to your point. But we're also seeing these names start to do well early, which is interesting because typically, what happens is, not always, but generally, there's like the risk. First of all, it's all risk, right? Compared to like, many other asset classes. And people are moving into the Bitcoin first, and then from there moving to the next thing, But we're seeing some of these things all kind of happening at once. So the question, I guess, is around timing. Like, do you see this as something that's happening concurrently as these other it's your first prediction is taking place, or is this something that's going to come later when the rally's longer in the tooth and people are really trying to like jump on the next thing?
Yeah, I think it sort of depends. So for projects like Doge, which they're already in the top 10, very big, have huge communities, I think that will likely be sort of in the second half of the year as the rally gets going, because it's kind of more like you needed quite a bit of new capital to really move Dogecoin, just because it's already an $11 billion market cap. And so what's happening right now is some of the newer projects, which are smaller, they're getting a huge bid right now because there's sort of like a capital rotation happening within crypto. So people who are already, crypto natives rotating out of ETH, out of BTC into things like Bonk or Dog with Hat. Whereas like Dogecoin is not, you know what I mean? It's going to be kind of like the last thing to move. But I will say Dogecoin, Dogecoin's like one of the very few projects in the top 25 that's actually down over the last 12 months. I mean, obviously Dogecoin is sort of it's just a meme coin. There's no real fundamental value to it. I should stress that. It does have, I guess what I'm trying to say is I think it will probably start to outperform a little bit more in the second half this year, just because I think the first half is still kind of shiny new toy time. So I think that's kind of my second prediction, I guess, is projects that are more focused on, I mean, it's kind of a very broad narrative, but there's definitely going to be a flight to growth and a flight to hype away from, projects that are more focused on sort of sustainability and profitability, such as Ethereum. I still think Ethereum is going to go, it's still going to have, like on an absolute basis, a very good year. I just think from like a relative performance, typically, like we see as the bull market gets more mature, the sort of higher beta, higher growth things outperform.
Interesting. Okay, I like it. And then what's number 3?
My number 3, this is more just, I'm not kind of an expert on ETFs, but I do think the Ethereum ETF will take a little bit longer to get approved than anyone wants. I would be surprised if it gets approved this year. I mean, it would obviously be fantastic, but and I understand Ethereum has, it also has futures, which is a huge, from what I understand legally, that's a huge sort of
Yeah.
I guess vote in favor of it being able to get ETFs. But there is some
a huge hurdle that's already been cleared that are exist.
Yes. Yeah, there is some things though that are different with Ethereum. So the first is it's clear that Gary Gensler has refused to label ETH as a non-security, whereas he sort of was clear that Bitcoin wasn't. So I think there's clearly far more opposition at the sort of SEC level towards Ethereum. And there is also more different dynamics in the sense that, Ethereum has a core team that still, to a certain extent, steers development. There's also a yield attached to Ethereum, you know what I mean, in terms of staking. Yeah. So I don't think it's nearly as clear cut as the sort of Bitcoin ETF.
Yeah.
Even though, so I think like in some respects, I guess in some respects that's good because Bitcoin's underperformed since the ETF has actually gone live, but obviously it sort of outperformed, and it was Bitcoin had the clear sort of buy the rumor, sell the news, where it outperformed right up until the ETF launched, and since then Ether has been outperforming. So I guess in some respects it's good that Ethereum won't have its ETF soon, at least from like a trading perspective. But obviously, like from a fundamental basis, that's bad given the huge flows that are in the TradFi world. So those are kind of my three predictions: revenge of the OG Ethereum killer chains, broadly hype and growth over fundamentals and profitability, and then Ethereum ETF takes longer than anyone wants, and is unlikely in 2024. Could easily be wrong on all three, but we'll see.
I love it. Okay, great. Well, those are great predictions. And I also wonder if number 3, the Ethereum ETF taking longer, might be one of the reasons why some of those alternative layer ones could also catch a bid, right? Like I think right now, increasingly, not priced in, but there's a growing confidence that this Ethereum ETF will get approved. And I mentioned in the opening monologue that the biggest evidence of this is the Grayscale Ethereum Trust, which has seen its discount to NAV converging on basically like 10%. Now, just as a reminder, like for everyone who's listening, ETFs typically trade in and around net asset value, because if they didn't, then people could basically buy the units at a discount and redeem them on the same day and capture that risk-free return. So that arbitrage effect keeps them pretty tightly trading. So the fact it's trading at a 10% discount suggests that an ETF is not imminent, but that it's certainly more likely than it was when it was at a 50% discount. So maybe the market is wrong in mispricing that risk. That's definitely a contrarian take, because I think maybe in August, September, when I was writing about this, it was contrarian to say that this ETF might get approved. Now it looks like it's a consensus view that this ETF is right around the corner. So we will certainly see. I love it. All right. So for me, just on the topic of ETFs, I think that like I won't spend too much time on this, but I will say that I think a lot of people are now wondering whether or not there will be ETFs and other kinds of names, and I just think that there won't for at least this year. So the likelihood of a Solana or a Link or a XRP or a BNB ETF is like slim to none. Around the ETF on the ETH, I just want to add some color, like just for our listeners. Even if Gary Gensler thinks that Ethereum is a security, that in and of itself is actually not a reason to prevent it from being in an ETF. There are actually single stock ETFs that exist, and most ETFs hold securities, right? So most ETFs have a basket or are tied to an index of stocks like the S&P 500 or the TSX 60, for example. What's interesting to me about Ethereum is the yield, and the yield is paid in kind. So it's paid in ETH. So it's sort of like if you're an Apple shareholder and they paid you a dividend in Apple stock, which is kind of effectively what a share buyback is, but because it's money that's being reinvested into buying back stock, retiring stock, and so forth. So I think what would be interesting is if an Ethereum ETF does launch, this is more on a hypothetical basis, what happens to the yield? because you can't pay in-kind yield to shareholders. You can't be have a brokerage account at Fidelity or Charles Schwab, and those firms are not enabled to also have a crypto asset wallet where you can deposit ETH dividends, right? So I think what the ETF would have to do is to convert it into cash and pay it as a cash dividend, or alternatively to take any yield and reinvest it into the underlying asset class, which I think is probably more likely. So there's some funky nuances to ETH that, to your point, that don't exist for Bitcoin. Okay, so for me, a couple things. Number one is, and I said this in our 2024 outlook from 9 Point Partners, which is available on the website. You can check it out in more detail. But I think that stablecoin value and stablecoin volumes are going to steadily increase, and that we're going to see a greater and greater share of stablecoin volumes belonging to more fundamental use cases, things like trade finance, for remittances, for just peer-to-peer transactions, the movement of money, rather than what it's currently being used for, which is sort of the biggest trading pair for most crypto assets. USDT, USDC today are the thing that most people use to buy and sell different kinds of assets in this space. What I think is going to happen over the next year is that a steady shift away from that towards more fundamental use cases. Circle put out its 2023 summary, and there was some interesting data in there, which I would encourage people to check out. But it's worth just pointing out the magnitude of this market. The report says that since its inception, USDC has been involved in $12 trillion of transactions. And actually, Bitwise put out their report, and they said that next year, they expect USDC will do more than the Visa network in terms of dollar values. And we've made similar kinds of prognostications in the past as well. So right now, the market's around $125 billion. Circle and USDC, weirdly, has actually shrunk in the last little while, I think, as they've focused themselves more on the regulated market. And I think that's in anticipation of going public, which they also just announced recently that they plan on doing that. But overall, I think we're going to see the market grow. I think that Tether USDT is something that's being widely used in the developing world because it is sort of permissionless. It sort of exists at like an extra regulatory level. And so people really can just use it like they can a peer-to-peer version of US dollars. And I think that USDC is increasingly going to become the asset that's used between US, like corridors between the US and other countries, and is going to increasingly be used by institutions. So we think that values are going to get to $200 billion by the end of this year. And I also think that you're going to see, just greater and greater institutional and mainstream retail adoption of the asset class.
Do you think, sorry to cut you off real quick, do you think that means Circle's proposed IPO is going to be kind of like a blowout moment, similar to kind of like the Coinbase IPO 4 years ago, I believe?
Well, be careful what we wish for, because every time we have one of these watershed moments in the public markets, everything seems to go down. It's like the Coinbase IPO top ticked the value of Coinbase. The Bitcoin ETF, I'm just kidding, but we're down from there. So it's like, the Circle IPO will be the thing that top ticks the next market. I don't know. I'm joking, but I think that probably, like, this is one of my other predictions for this year, which is that I think that the Circle IPO is something that will be welcomed by investors, because I think right now there's a real lack of ways for public equity investors to get exposure to this asset class and to this industry. But I think that is starting to steadily change. So for us at 9 Point, we have the Web3 Innovators Fund that has exposure to Bitcoin and ETH through these ETF products, but also has exposure to Coinbase and others. A company like Circle is perfectly in our wheelhouse and something that we would clearly take a strong look at. And I think that over time, as more and more of the companies, the corporations that are in this industry choose to go public, then that acts as a long-term tailwind for that investment universe. So I think that we are going to see this Circle IPO happen, hopefully. I mean, it's a prediction, so we can't be sure. But I do think that that's something that's could help to potentially open the floodgates for a lot of private companies that have been sitting on the sidelines. Lots of other great businesses out there that I think could be well suited to the public markets, which are not yet listed, and would welcome all of those as companies that are traded. So sort of that's like, I guess, two predictions in one, which is that I think that over time we see more and more companies going public, and that creates a bigger investment universe for investors who are unable or unwilling to own the underlying asset. And then also, I think that you see the stablecoin values continue to increase and shift away from pure speculation towards more mainstream use cases. The second prediction is that I think you're going to continue to see accelerated enterprise adoption of public blockchains. Hopefully that this ETF launch, more than anything else, helps to really reset the conversation around Web3 and the blockchain-enabled internet, and helps to increase not only the interest in owning the asset, but also increase the interest in understanding the underlying technology and how it might be applied for individuals and for businesses. Right now, the latest survey said that over half of Fortune 100 companies are already doing something in Web3. Now, I have a Web3 strategy. Now, I think that's a pretty broad sort of, range of activities, everything from testing something out to maybe investing much more heavily in it. But I think overall, we're going to see more and more of that happen. And as I've described it in my book and in subsequent episodes of this podcast, it's not about boiling the ocean. It's not about moving your whole business onto a blockchain or like Visa becoming a stablecoin company or something. What it is about reaching into what I call the Web3 toolkit and finding some device, a tool, a technology, something that allows you to do something you couldn't do before and to do it better, or maybe to tap into a new market or access a new customer base. And I think, what Circle is doing, for example, around stablecoins is really interesting. So it's partnering with a lot of mainstream payment providers, payment service providers in different parts of the world, especially in Latin America, Southeast Asia, South Asia, et cetera, where access to, US dollar asset is something that's hugely, hugely valuable. And it's doing it through a partnership with mainstream companies. So I can see a lot more of that happening as well. And I can also see a lot more businesses looking at this as a way to, grow their business. And that's something that I think is really interesting. Not just who are the companies that are highly leveraged to this technology, but who stands to benefit and who are the early adopters as well.
So what do you think? Because I've actually been seeing, the enterprises coming to blockchain is obviously is pretty contrarian narrative given the sort of progress of it. There's some green shoots everywhere. But do you think? I guess my question is, do you think enterprises will use public blockchains, so like Ethereum or Polygon directly, or do you think they will launch their own sort of like controlled like L2s or their own sort of controlled chains? So I think I sort of think of it as like Coinbase. I mean, Coinbase is obviously a crypto native app, but they just ended up building their own L2 that they obviously gain the economics from. I guess I'm kind of curious, what do you think? Like what is the shape of the enterprises using crypto and public blockchains? Is it kind of like a hybrid chain that they control? I think there was things like Quorum, I think was like the JP Morgan project.
Quorum, Hyperledger, others like it who trying to build sort of R3. There are several that are sort of like that.
And that's kind of like a graveyard, to be honest with you.
Exactly. I think in a way, like the proof is in the pudding. Like, so the analogy that I make is that, in the 1990s, people were really interested in the web, but they didn't like the idea of the open internet because it was full of misinformation and criminals, and it wasn't secure and it wasn't enterprise ready. So the solution was to build intranets, networks that were closed and permissioned, that were controlled by their members or their users or their owners. And I think that in many respects, the first era of enterprise blockchains mirrored the enterprise intranets of the 1990s. And I think that the fact of the matter is they didn't work. I was in New York for the New York launch of my book, and on stage was Paul Brody, who's the enterprise lead for Ernst & Young, for EY. And he's someone who's also written a lot about this area. And his book is, I think, called like Ethereum for the Enterprise. And he's basically, his view is like, look, none of these things scaled. None of them went to production. All of those pilot projects are in the graveyard, the dustbin of history. And that's okay in a way, because all of that work help to maybe increase institutional knowledge and comfort with this technology. But ultimately, like all of the big stuff is going to be happening on public blockchains. And in many respects, that's true. That was true for the internet. It's true that in the 1990s, the web was sort of nascent technology, but the way, open technologies work is that there are people building on top of it. There's improvements to the underlying infrastructure. And all of those things make it more and more ready for prime time, ready for business. And I actually think that the merge, and I think we've talked about this on the show, the merge that happened in the fall of 2022, hard to believe, but basically the move from proof of work to proof of stake, I think made it much, much easier for enterprises to use this technology, especially consumer facing or publicly traded companies, because despite the nuances of energy use and blockchains and so on and so forth, like it was easy for critics to say that, well, proof of work boils the oceans or whatever. And that was a reason enough to sort of stay away. That's no longer the case. Therefore, I think it's much more likely that these things get adopted. And I think that you're going to see increasingly implementations on top of public networks. A company like Coinbase, as you pointed out, built its own L2 called Base and does its own thing. Like, I don't think that, FedEx or Coca-Cola or Shopify or these companies are going to do that necessarily. They may use Base, they may use Polygon, and in fact, Polygon's been widely used by lots of big companies. But it's not going to be like they're going to build their own proprietary closed system on top of that. So to make a long story short, this is something that is going to be good for business. It's going to be good for crypto because it's going to mean more users. And, as you pointed out in your predictions, the business model is that they're selling block space. So if there's more demand, whether it's from traders or from DeFi builders or from enterprises, it's going to mean an increased demand for block space, which is going to mean more fees for the network, which is going to mean more value accrued in the long run for people who are like long-term patient token holders. This is my view, I believe. So that's number two. And then the final one, and you sort of alluded to it, is we had the DeFi summer, right? 2020, I guess, 2020. And then that led into 2021, the bull market. I think that we're going to have the D everything market this year, the D business market. So, and I've talked about this before, but basically, you've got DeFi, people are talking about DeSci, decentralized science, DePIN, decentralized physical infrastructure, DAI. I don't know, there's a snappy term for that, but basically, can we bring blockchain tools to bear on what's going on in the world of AI? And I think that these are, to your point, very newsy narrative sort of driven themes, right? Oh my God, blockchain and AI, like get me all over that. I think people are thinking, or, DePIN, it's like, nothing so powerful as an idea whose time has come. Again, this is something we saw with Filecoin and others in their ICO stage, but now maybe the rubber's hitting the road, or that's the perception. So beneath the hype, I do think there's a lot of really serious innovation going on. We talked to the folks from the Render Network, for example. That's another name that's done extremely well in the past little while. We've talked to Greg Osuri at Akash. Greg is building decentralized cloud that harnesses latent GPU capacity to support AI and graphics and other computing needs. Hive Mapper, we spoke to those guys. The data that they put out recently is that they've now mapped, I think, like 10% of the entire world's surface. And in some places like New York and Seoul and LA and others, they've got better mapping data increasingly than traditional centralized players. So what excites me, and hopefully this is something that has legs, is that it's not just hype. It's not just narrative. It's hype, narrative, and fundamentals. And if you can get all of these three things converging together at the right time with the right technology platform underneath it, then it's going to mean a bigger, better bull market, but also maybe one that's a bit more sustainable, one that has legs, right? Instead of something that sort of gets hyped and then settles into some sort of long-term lower trend. I think there's a potential that if we're able to align these fundamentals, that you see long-term and sustainable growth. So that's something that I'm really interested in. On the decentralized AI thesis, I mean, to me, it's basically at every single level of the AI stack, there's a way to introduce blockchain Web3. So at the fundamental computing level, Render Network, which is mostly for graphics, but the idea that you can harness computing power and use it to support something like AI, training AI models or doing inference is a really interesting thing. And like a cash network is doing that specifically. The models themselves. This is something that I think is the holy grail, which is that could you have a more open, more inclusive form of governance with greater transparency? And is that something that could be modeled on, DeFi and other sorts of Web3 models of governance? The data itself, right now, the data is coming, it exists in silos. Nobody knows the provenance, who owns it, and so forth. OpenAI has been on a binge of like signing licensing deals with like content creators, like all these different companies to try and get their content. I think that that's one way of doing it. Another way of doing it is to use, tokenization as a way to prove ownership, so that any data that does get used in a model or does create value ends up compensating the original contributor. And then I just see a lot of really cool apps, emerging potentially at the convergence of AI and blockchain. So like DeFi is this bewildering thing that for a lot of people, it's just like beyond the scope of their understanding or their ability. But what if you had a financial advisor who could help you to source the best opportunities, do all the custody and trading on your behalf, and help you earn, yields or make investments passively? So I see these sort of convergence of technologies happening as well. So the decentralized everything theme, I think, is going to become increasingly very popular. And like we know of some of these, but maybe there will be others. And this will be how the next, $1 billion project gets minted. It's like, can we do D something? D predictions? I don't know. There's this sub prefix of D something, I think, is going to become like the way in which we describe new emerging application-based trends, essentially.
I love it.
Yeah.
I love it.
Yeah. So lots to look forward to, lots to keep our eye on. All of these things are going to be, a moving, evolving target, I suppose, but they're also going to be stuff that we're going to be focusing on the show. So we've already this year had, the folks from DYDX, right, to talk about the migration to Cosmos. And maybe Cosmos, though it's sort of not on L1, is an example of that sort of revenge of the OG L1 thesis. We had Osmosis, Sunny, come on the show to talk about, DeFi. And next week, we're going to have the folks from Noble back again. Remember, this is the stablecoin project that we spoke to before they launched, and they're already up to, I think, $90 million in circulating supply after only being around for a few months, and are one of the most exciting and fastest growing stories in the space today. So on the stablecoin thesis as well, we'll dig into how those stablecoins are being used. And then all these other themes, like this is going to be how we approach the show this year, right? We're going to be looking at all these different narratives, talking about them, you and me, but also talking to people who are actually building stuff in the space. And we hope that everyone who's listening today joins us in the future. Tell your friends, give us a rating on Apple, Spotify, wherever you listen to your podcast. Check it out on YouTube. Share it, support what we're doing, and we'll keep trying to deliver our very best to you week in and week out. That's it for this week's episode of DeFi Decoded. We appreciate everyone's time. And future's so bright, you got to wear shades. Andrew, here's to another great year of DeFi Decoded together. Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.